Right, good morning traders, happy Monday and welcome to the Ninjacators Morning Bell with me, Richard. Sorry, I'm just clearing my throat a little bit there. Quick look at the economic calendar today. There's not much happening scheduled for today. No IMPAC news events for the US. That being said, we have the congressional elections tomorrow, which might affect the markets, and then all eyes will also be turning to Thursday CPI data, month-on-month, year-on-year, and a core CPI month-on-month figures. So those are the high-impact news events scheduled for this week. And yeah, bank holiday on Friday. So yeah, take note of those events, as well as we'll do obviously the technical analysis on the ES, the NQ, crude oil, and gold as usual. Right, from where we left off on Friday, markets obviously, when they released those new interest rate hikes, they geared things up with another 75 basis points. We had a strong decline. Price then reached an area of support, which is in the shape of this purple line sloping to the upside, which is center median line where price previously bounced from. All right, so this might act as support. And price then again, when was this, on Friday and today, during some time in the electronic session, has reached the center median line, or sorry, the lower median line, this green line sloping to the downside of this shift pitchfork that we had in our charts for months now, basically tracking this entire decline to the downside. Still been working really well as support and resistance, shall I say angular support and resistance. And now with price testing that again, it is at resistance around about 3,796, give or take, guys. So previously I also said that this move into this high of last week looked like a WXY pattern, i.e. a double zigzag, which is basically means two ABCs conjoined by a WX axis, and the entire thing labeled as a Y wave. Now, the reason why I did that was because I still believe that this entire move that we've seen to the upside was just a relief rally and a corrective move within a much larger incomplete corrective pattern that I still think could move lower. So in the overall bigger picture, whether we're going to see the market find resistance now and sell off or actually move even higher, even if that does happen, I'll still view it as corrective in nature, meaning the price could actually move even higher, discounting the idea that it was a WXY corrective pattern. So the entire move to the downside I'm still viewing as corrective, like I've been saying for quite some time, and that even that is in itself a much larger and very complex, very volatile, albeit WXY pattern that is yet to complete. So that's my thinking. I still feel that that is possible, and as always, we're going to have to, over the short term, watch the support and resistance levels, and if price breaks either one of them, upside resistance again 3,796, give or take, or this lower median line, which is around about 3,710ish plus minus. That should give us an idea as to whether this correction is still underway, or what I propose is correction, should I say, or whether prices are gearing up to actually start moving lower in that proposed last Y wave. So from this high on the 16th of August, I still proposed that this was an A wave. What this might be, whether it's complete or not, like I've been saying, is a B wave, and then a final C wave to complete that larger Y wave, or the secondary zigzag of a WXY or double zigzag formation. So that is what I'm looking at. Let's quickly look at 4-hour chart again. Not much has changed obviously since Friday. And again, the CPI data as well as these congressional selections might, throw a spanner in the works or have price follow our projections. We'll just have to wait and see. So we had this 1, 2, 3, which I still labeled as a WX, and another 1, 2, 3 to the upside to potentially complete a Y wave Very strong sell-off. Looks like even that was in a 1, 2, 3, 4, 5 sort of wave. Unless price obviously starts moving up, test these highs that were set on the 1st of November, then I'll have to start thinking that we're potentially seeing some sort of a leading diagonal for an A wave, meaning an A, and whatever this is corrective, and then we're going to get another move back upwards. So it's all about watching where price is currently, where and how it relates to the market geometry lines and how it reacts from these lines. So you can see clearly how it's been bouncing between these two lines. So either break of either one to the upside or downside should give us a good indication of where price could move next. Okay, so that's the ES. Let's switch over to the NQ. As always, guys, if you've got any questions, let me know there in the chat box, and we're more than happy to answer them for you guys. All right, I do see we've got a few people in the room today, which is always good. So let me know if you've got any question, guys. All right, let's proceed to the NQ. NQ obviously been much weaker than the ES, where the ES was sort of like, you know, I think it retraced something a bit more than 50% of the previous move to the upside. The NQ, on the other hand, nearly tested these lows that were set on the 13th of October. But similar sort of thing here. We've had the support zone prior to price moving into it. It acted as support. Price moved into another area that we proposed could act as resistance. It acted as resistance. Again, these are just basically confluence areas where we have multiple market geometry lines crossing in different directions. And similar to the ES, we also have a shift pitchfork that's been tracking this entire incline, or decline, sorry, on the NQ. And yeah, there's a lot of lines on these charts, but please go re-watch those previous videos. Again, guys, all these sessions are recorded live as well. So you can go review them on our Ninjacators channel if you do not understand or want to catch up on some of the analysis I've done previously. But this instance here on the 16th of June, price moved higher from a low red warning line. We also had an upward sloping median line, this green line. That's what we call confluence. Strong bounce to the upside. Strong move back lower. Although I have to say that when was this? On the 13th of October, the NQ sort of halted just short of this lower red warning line. You see, it didn't reach it. Let me just get rid of those lines again. A move back up, although it wasn't as strong as the ES, like I've been saying, and then also a very strong move lower, stronger than the ES. So now price is sort of stuck in this what was previously support zone. I can't really say there's going to be a resistance zone now, because I would like to see a close below the 10,758.5 sort of area to the upside, 10,942. It's not uncommon for price to fluctuate above and below, but it's been in here now for a third day in a row. So again, similar to the ES, price breaks below an area we're watching and closes below it, then I think on the NQ there's a good chance that price will then retest this lower red warning line, and you'll also notice that we have another red warning line sloping to the upside. Now that one is basically derived from a pitchfork that I've drawn on my chart. It's been on my chart for a very long time, so that could also act as very, very strong support. But also, same thing in the bigger picture for the NQ. I still think that lower prices are possible, and whatever we've seen here might be the final, should I say, sorry, I'm mixing up my words here. The actual final decline that we might see in indices could potentially take us into the end of the year and potentially into the first quarter of next year. So on the lower end, we got a 10,000, let's call it 10,000 to the upside, 10,219, 10,220 sort of area, which will be next up if price breaks lower on the NQ, where potential support might step in. But that's it for the NQ. Not much has changed. Like I said, normally Monday's update's a little bit shorter because, you know, there was a weekend in between our final update. Again, a lot of these markets are probably going to react to these news events this week. So we'll have to keep an eye on that and just be mindful of that as well. Crude oil, on the other hand, beautiful reversal again. Yeah, in September, on the end of December, from an area we identified. Also an area where we had confluence between an upward sloping, in this case it wasn't a median line, but a channel line, and also this lower median line of a shift pitchfork again. I love using the shift pitchfork settings, especially if I think I'm dealing with a corrective market, or in some cases where you don't really have a strong trending market, but a lot of the sideways sort of whipping price action, then your shift pitchfork setting is quite often the best setting to use. So we had a very strong bounce there. Price found resistance right at the center channel line, this blue dashed line running to the upside. And again, these lines have been on my chart for an extremely long period of time. So still pretty cool to see how the markets get drawn towards these lines, as well as find support and resistance at these lines. So we previously identified potential resistance, and that whatever happened over here was potentially corrective in nature. Although I don't have the levels or the labels on levels here, we had this very small support zone here where we believed a correction might end, and it did. Price moved back upwards. We also had on the crude oil a beautiful 61.8 retracement from this previous incline to the upside. So it was a perfect area for a reversal. Price did not behave similar to this previous incline though. It just started like moving sideways, zicky-zacky to the upside. And even if we see a market that's moving upwards, in my opinion, I think whatever we're seeing here could be corrective in nature. This after a 5-wave, very messy sequence that ended within that area that we identified beforehand. So in the bigger picture, thinking that whatever we're seeing here is potentially just corrective in nature, and that we might see another move back downwards. Well, that is the thinking here. The other thing is that I'm completely wrong about this 5-wave sequence, and that what we're really seeing here is just some sort of more sideways, very wide-ranging mess that we'll have to figure out on the fly as obviously time progresses and price also materializes. So for the time being, we said, I think when was this, in the beginning of, or end of October, we'll have potential resistance at a pitchfork that I slope to the upside. Again, this is a shift pitchfork, assuming that whatever this is might be corrective. It is my go-to setting when I believe I'm dealing with a corrective market. Now, it did act as resistance there. That's a really good sign that this pitchfork will then work and continue potentially to work to a very high degree as price moves back upwards. We were then looking at a level, I think it was 89, which is just a center median line resistance. It found resistance for just pretty much one day at the 90 spot 30 level for a while, and then when was it, Friday, price eventually broke above it, and it's now retesting that same level. So that center median line currently is around about $91. All right, you can see it retested it today, and it's now bouncing back up again. Prices already just breached these previous highs that were set on the 10th of October. Sorry. So my expectation is that prices could potentially even move higher. Now we'll have to continuously update these zones as price moves higher because of these angular lines that's continuously sloping upwards, and obviously show higher prices as time progresses or passes by. So our projections last week was at least a test of these highs that materialized. Price tested the center median line, which might now act as support. So at resistance, potential support now. So I think there's a good chance that we can see price move into the 94 area towards 97.56 and potentially even higher. Again, I'm assuming that whatever this is a corrective bounce, and that it will retrace a decent portion of this previous move to the downside. Now, price has tested also the 38.2 retracement of this high from the 14th of June till this low to the 26th of September. So the next one up, so 50%, and it falls right within that zone that I've labeled on the upside. So I think that is really attainable. We might see a move there, and perhaps even also a retest or not a retest, it hasn't tested yet, a test of this median line sloping to the upside, which I am using to potentially track, or should I say tracking what I think is a corrective move. But due to the nature of this zigzaggy behavior that we're seeing here, it might be that if this is an ABC corrective move to the upside, that the C wave is sort of tracing out. No, I should actually delete that. I still need to find something else. Let's lose this. That we're seeing a C wave that's tracing out as a 1, 2, 3, 4, 5 to complete the potential C wave, and then we see a move to the downside. So yeah, over the near term, keep an eye on the 91 level. I think that's strong support right now. We can already see the price test that, and it is bouncing higher. That happened today already. So on the upside, like I said, 94 plus minus to even higher, 97.56. I think are targets that's really attainable. Maybe even today, if we see a break above these highs on Friday, then at least towards 94 to 94.07, 94.10, around about there on crude oil. Right, let's move over to gold. Well, I'll just quickly talk about the bigger picture in gold again. I still need to redo charts with a white background. This is what I call now my bigger picture view. I have to do one for crude, the ES, and for the Nasdaq as well. I think it's just quickly to use for reference. It's really cool to see what I'm thinking in the bigger picture. In this case for gold, I think whatever happened here is just a very messy corrective pattern, and I still think, and I'm still sticking to this until obviously the pattern changes, that we are in this final C wave of what we call an expanded flat. Now the A wave of an expanded flat, they like zigzags, but the A wave travels in 3 waves, in this case combination, 3 waves. The B wave travels in 3 waves, again combination, where this was actually a triangle ABC, ABC, and then final C wave in 5 waves, 1, 2, 3, 4, 5. Now we did have that earlier this year, 1, 2, 3, 4, 5. We've seen beautiful 5 waves, but I did also say that normally your C waves travel a fair distance below your A wave, and there it just pipped these lows that were set in March last year. There was a bit too shallow for a C wave, so I'm still thinking that whatever is happening here is actually tracing out as an ending diagonal for the final 5th wave. What I mean by that, let's switch to this chart over here again. Meaning that we had 1 of the C wave, 2 of the C wave, a shorter 3rd wave of the C wave, which is not uncommon for the commodity market, a 4th wave here, and then that final 5th wave tracing out as an ending diagonal. Now, last week we identified this area on the lower end, 1679 spot 30, to the upper end, 1693 spot 10, plus minus, which might act as resistance. And I'm still thinking that it is possible that we could see another move lower that could potentially be the final leg lower of what I still propose could be a bottoming pattern or end of a corrective wave, which is potentially not over just yet. Now, if you remember from Friday, I was also saying that even these internal waves of an ending diagonal generally trace out 3 waves. So I'm thinking this is the final one, a 1, and that this is corrective, and that we're going to get another one downwards, potentially as low as 1563, 1590. Again, give or take, we'll have to update these levels if price does move lower. And why I'm thinking this is corrective in nature is simply because here you can clearly see, and we'll switch to a 4-hour in just a minute, a 3-wave pattern into a low, and not 5 waves. Remember, if I just get rid of this, maybe it's better for you guys to see. You're looking for a 5, 3, 5 pattern. And that final 5th of the fifth of that C wave, if that makes sense. Again, guys, sometimes if you're new to some of these concepts, then just continue coming into the trading room or the analysis room, and we'll, the more you see this, I think you'll more start understanding what it is that I'm looking at. A lot of price patterns what I look for. I want to see these areas of confluence and market geometry, in different sequences, and then we identify these zones where we potentially expect resistance or support to step in. So we also had this previous area here. Beautifully, prices reached in there, went into the middle of it, and a sharp reversal lower. So this stuff does work, again, but if it is a little bit confusing, please do ask. That's why I'm here as well, guys. Drop some questions there in the chat box. I'll be more than happy to help you guys out. In any case, I'm viewing this as corrective, and let's go to the 4-hour chart to show why I do think that. Right, that's that bounce higher here. And here we can clearly see a 3-wave behavior, right? Now, at that stage, one would think, okay, that's the end of a potential single zigzag, which is the most common corrective move, and that you can expect another move lower, potentially, to break where you expect that potential correction started from, in this case, these lows on the 21st of October. But what happened here was, instead of tracing out a 1, 2, 3, 4, 5 wave move, and the reason why I'm saying if this was a 1, that was a 2, and this was a 3, your fourth wave should not pull into the area of your first wave. It's basic Elliott wave analysis, which discounts the idea that this was a 5-wave move. This, to me, looks like an A, a B, and a C. So this is the inverse of that larger picture, or the bigger picture I showed you, that I'm thinking we're dealing with a expanded flat. In this case, you have a move lower. You have an A, B, C, A, B, C. In some cases, C waves just travels the same sort of area from where your A wave started from, and then a 5-wave move to the upside, completing what we call an expanding triangle, in this case a bullish sort of move to the upside against the larger downward trend, if that makes sense. Now, to track these, again, we can also use pitchfork again. Let me just switch my magnet mode on. Go from this low, assuming that that was an A wave, this was a B wave. Let me get rid of all these lines. To understand, it gets quite cluttered sometimes. That if this is a C wave, that it will generally travel a fib to a fib extension ratio of your first A wave. See, recently it just reached the 100. Typical area for a C wave of expanded flat to move into is 138.2 to 161.8 fib extension levels. So although we're in here at an area of resistance, it is possible that gold could move even higher. But then again, let's keep an eye on how price behaves within this area. I just quickly want to switch back to the daily and talk about at what stage I might think that I'm either wrong about this ending diagonal, or I think this might even be a situation where an ending diagonal already ended and that gold's actually gearing up for much higher prices. So I've mentioned this also, I think last week and the week before I started mentioning this. This previous lower high that was set on, we should call both of them, on the 4th of October and the 5th of October. If price breaks above this level, then I would consider that that C wave already ended over here, or potentially here. No, it should be over here. And I'm completely wrong about this 3-wave move, and that this is just a corrective move to the upside. If price breaks that, then for me that'll be very important previous market structure that has been broken. And I think I would say to a much higher confidence level, think that we potentially bottomed in gold, and that price is now potentially gearing up to go way higher. So let's not get too far ahead of ourselves. I still think that this might act as resistance, maybe even a little bit higher. Like I said, that is the line in the sand. That would basically let me know if I'm wrong about more lower prices or whether this correction, or larger corrections, ended already. Right, again, let's see how these things react again to the CPI numbers. Gold will most likely react like it has done for this entire year. So yeah, let's keep an eye on that, and we'll recap obviously things again on Wednesday. How are we doing for time? Right, let's quickly look at the dollar index and then we'll call it a day. Dollar index, also similar to crude oil, had these channels on my charts for a very long time. This is prior to price actually reaching this high over here and these lows over here. And this is on a weekly time frame. This is just a bigger picture. So these highs in 2020 and these lows in Jan 2021 all reacted from areas of market geometry, almost picture perfectly. And these were drawn after the fact. They were on the chart for quite a long time. We've seen a move up, a retest of those areas. And then quite often if you see price break a channel, then it's a good idea to double it up, as I call it, and copy and paste it, and then project it a little bit higher. You know, they all run the same parallel lines, and this is exactly what happened here on the week ending, when was it, September, when the dollar index reached this upper channel line. We had a zone here about 114.46, 116-ish, where we said that we might see resistance step in, price move lower, found a little bit supported at this dashed median line, the green one sloping to the upside, moved lower again, and it was last week, and since this is weekly channel, I thought, no, this was just an ABC, but now it looks like the dollar index is obviously a little bit weaker than initially expected. So it failed to stay, or close above, should I say, on the weekly, above the center median line. Let's put a label on there. So that is resistance for me, 111.45. If price continues lower here, then we'll have, I think, very strong support within this area here, which is around about 106.96. I should actually update that. Let's do that properly. Being lazy here. 106.54. Let's call it 106.50 to the upside, 107.50. And basically that zone is how you derive, or is derived again, yet again, from confluence areas where we have an upward sloping, in this case, center median line of a pitchfork, and we also have the center line of that channel running straight through this area. So should prices move much lower, I think this is a very strong area for support to step in. That is if price actually also fails to find support at these previous highs over here. So let's drop a line in there as well. 108.89. That's sort of in the middle of the air for me. I like to see prices move into areas of market geometry, which is what I labeled there for you, that confluence zone. Before I log off for today or in today's session, price has not reached this upper median line of this green pitchfork yet. So this begs the question, I think even if price moves lower, that whatever we're seeing here could potentially just be a corrective move. And whenever that ends, that we could still see another move back to the upside. But over the near term, I'm watching the 114.45 area as potential resistance. Below that, 108.89, and a very strong support with 106.50 to 107.50 area. All right, guys, if there's any questions, as always, let me know. Again, thanks for watching. Again, if you miss any of these sessions, then they are recorded and they will be available on our Ninjacators YouTube channels directly after the recording, so you can catch up if you want to. I also put in timestamps there so you can jump to the markets that we're covering that you prefer to trade or to analyze. And yeah, again, if there's any questions during any of the sessions, let me know. That's why we also have them live. And yeah, there's no questions today. So that's all cool, guys. Thanks very much for watching. Like I said, I'll be back again on a Wednesday and see where the markets are at. And until next time, have a good one. Take care and goodbye.